Insurance cover, surely one of the most important pieces to any financial ecosystem and clearly an important part of DeFi. As more money flows into cryptocurrency, the demand for insurance is only going to go up. I think this is a prime sector for some unbelievable gains over this bull run as the crypto market cap surpasses 2 trillion into 3 trillion, 4 trillion, 5 trillion, and even more. So in this video, taking you through the insurance protocols on hand right now and shining the spotlight on my preferred pick, Insurace. Now, for full disclosure, I own a rather big bag of Insurace tokens and the team have kindly sponsored today's video. That being said, if you enjoy the content in today's video, make sure you subscribe to the channel and turn on those post notifications. So as we see more market entrance into cryptocurrency, the TVL for DeFi is only going to go up. Yields in traditional finance are so low that the allure of DeFi is just too much for people to ignore at this stage. So as money flows into this sector, as we blast past inevitably 100 billion in TVL, we're going to see the need for insurance grow more and more. After all, you can't put your full life savings into something without insurance, as that's going to leave you having some serious sleepless nights. So you need to take that stress away and get fully insured to mitigate against smart contract risks, maybe your favorite stablecoin depegging, that kind of thing. Because what have we learned over the past 12 months? Well, you can't really take an audit from one of the top teams like Certic as a golden tick that the protocol will not be hacked. And we've seen many multiple audited protocols actually get hacked. So the only way to really look after yourself is through insurance coverage. So here we have the top insurance coins on CoinGecko. The charge led here by Nexus Mutual, market cap now nearing $1 billion. For a little bit of background here, I've been looking at this sector for over the past year. Ever since DeFi summer of 2020, I started to take note of the insurance sector. At that time, there was only about 5 or 6 protocols in total. Some of these down here, like Etherisk and Cover, were around back then, but they've had rather lackluster performance. So if you're looking for a token to invest in, these ones have not performed all that well. They're pretty much up 4 or 5x on average from this time last year, whereas Nexus Mutual's up around 12 or 13x. So we looked through the list, but not too far down, as essentially if the market cap is absolutely tiny, like some of these are sub $1 million, that doesn't give you a lot of confidence to go ahead and get insurance with one of these protocols. And it certainly means that none of the big boys are going to be putting their money behind these and insuring with these guys when they're actually probably putting in more capital than their total market caps. So with our eyes on the top 6 or 7 protocols here, I've picked out Insurace as the best value play. So this is what we're going to go into today. Let's just compare quickly against Nexus Mutual over the last 90 days, just to make sure that it is outperforming, else we should just go with the big boy here. So Nexus with a price around $80 on average over the last 90 days and is now at around 140. So under a 2x in that period. Insurace roughly from around $1 here. It's tagged $1 on a few occasions and now is neatly above $2 and around 16 cents right now. But you can see it's coiling here and I expect this one to go through another leg up. So this currently just over a 2x. So checking that box of having a better ROI over the last 90 days than that of Nexus, the big daddy in this industry. So Insurace currently ranked 771 and the market cap just $25 million. TVL currently $28 million. So let's jump into some documentation here. Insurace, a leading decentralized multi-chain insurance protocol providing reliable, robust, and secure insurance services to DeFi users, allowing them to protect their investment funds against various risks. So as I alluded to, smart contract risks, the risk of your stablecoin depegging, a centralized exchange being hacked, all those things can be covered. And they say that they have unbeatable low cover premiums. So if you compare costs, they are a bit cheaper than Nexus Mutual. They have also cross-chain coverage and they are going hard on getting cross-chain as soon as possible, already on ETH, BSC, and Polygon, with more to come. And down the pipeline, they have an investment portal coming, and they've also currently got a mining program live. So this one debuted in April of 2021. So roughly just 6 months of this going live. And they already boast over 60 plus protocols, 4 centralized exchanges, and 1 IDO platform where you can get coverage for. And as you can see from this list here, they want to tap into other ecosystems soon, the likes of Solana, Hecko, Phantom, and XDAI. So the guys behind this one, led by Oliver Z here. He has previously worked as a CTO for a major exchange out in Singapore. This is a Singapore-based company. Their tech lead, Some Wei here, previously worked at Microsoft and IBM, and their marketing lead, Dan Thompson, former Goldman Sachs employee. So these guys certainly have great credentials. Their investors as well are super high caliber. The best VCs in the business are all over this one. You've got the likes of Defiance Capital, Parify, and Alameda, just to name 3. And when Alameda are in the mix, you know that Sam has given his blessing to this one, and it came as no surprise that Solana development grant was awarded to Insurace just in the last month. So these guys will be cross-chain on Solana very soon. So you can see the multi-chain future has to be embraced to be successful, and Insurace are taking that with both hands. They've also got a load of partnerships here with some very reputable businesses, and some that I will be looking to get my own insurance coverage for, the likes of Anchor and Spirit and SpookySwap over on Phantom for me personally. So this is the landing page for actually taking out your coverage. Now, a handy thing for this is you can do all of this without a KYC, something you can't do with Nexus, as they ensure you must have a KYC. So I do prefer this for that element of additional privacy and more security on my end. I don't particularly think there's a need for an insurance company to know who exactly they're insuring as long as the criteria are met here. So that is a bonus. So all you have to do is connect your wallet directly to the site, and you can start shopping for your coverage. You can see all the various chains that they've currently got going on here. So for example, if you want to take out some insurance on a BSC play, maybe you've got some Alpha Homora here, or maybe on Polygon, you're farming with QuickSwap, or maybe on Terra, you've got Anchor Protocol earning you 19% on your stables, and you just want to have a good night's sleep. So this is where you can come to take out some of those insurance policies. Now, the neat thing with this is the fact that if you take out an individual policy, of course, you're going to pay a set premium, but what you can do is take out a portfolio insurance policy, so you could add up all the different places you've got funds. So let's say we've got Dodo, Badger, and we've got Kyber down here. We can then bring that up. So what this will do is actually give us a bit of a multiplier of discount by having all 3 of these coverages purchased through one transaction. Additional to this, of course, by using ETH, this will go through on just the one transaction and save us on gas as well. And again, this is something you can't do on Nexus. So I'm just going to tap in a few figures here and we'll see what the premium is. Let's just say we've got 1 ETH on all of these different protocols, and we're going to do a 30-day insurance. Now from here, you can see that this covers us for smart contract vulnerability, but do dive into the documentation behind this to see exactly what this means and how you are affected and what you can claim for. So I'm covering 3 ETHs worth here for 30 days across Dodo, Badger, and Kyber. And you'll also see you can get a 5% discount by being referred by someone. I will leave a link down below so you can get a 5% discount if you tap in my code here. May as well do that, shave a little bit off the premium, and then you need to agree to the terms and conditions and acknowledge the fact that you've actually read the claim process and the coverage from the smart contract vulnerability. So once you do that, just press confirm, and then you have to do an Ethereum transaction. So as you can see, it then pops up with your MetaMask. I'm not going to approve this as I don't require this coverage, but you can see it's rather easy to do. So if you go to the claims tab up here, you can see one of the former claims here on Auto Farm that was rejected. So it's a good idea to understand what the process really is. So what would happen is you would actually go ahead and make your claim request directly on the dApp. And then Insurace have their own investigation team, an advisory board made up of people with legal backgrounds, people who are in tech. And what they will do is actually put a report together that you could go into and see what the basis of the claim is. And then from that, they're going to put forward a suggestion. And then this goes forward to voting. So this is where the community of Insurace holders actually gets to either accept or reject the application for this. So this gives that final say, and you're incentivized to act accordingly and make a sensible decision as a token holder, because of course, if you start rejecting every claim because you don't want any of the funds to be drawn from the actual protocol itself, well then no one's going to actually take out an insurance coverage with you. If you're not paying out when there's legitimate reason to do so, no one will use your insurance. So we should have a fairly swift and foolproof mechanism for ensuring fairness here. But however, there is of course a complaint period over 24 hours. So if the person thinks they've been treated rather harshly, they can make a complaint here. And then step 5 is either the payout or not, in whatever case it may be. There's more information here on the docs page, which I'll leave down below to see exactly how everything works, including the capital provision, their full pricing model, and all the various products that they have on hand right now. But that's pretty much how it works in terms of taking out a policy and then maybe having to claim for your various protocol being hacked. You can then dive into the actual claims and see what was said and see what the advisory board gave as their advice. Another I looked into was for the Iron Finance and Titan depegging. So someone had an insurance plan for that, but essentially that only covered them for smart contract risk. But in the case of Titan losing its $1 peg and just going into a bit of a death spiral, that was just due to economic events. And so that claim was rejected because there was no issue with the smart contract. So looking back through some of the history, it does seem to have been working well so far, even though we're just 6 months in. Additionally, on this platform, you can also become an underwriter here and post up collateral for claims. So this obviously comes with a lot of risk, because if there's not enough funds pooled in the premium, then this is kind of the backup. This is where they come to next. So say there was a hack for $1 million they've got to pay out, and there's $400,000 in the premium, then $600K is going to have to come from here. So you do literally put yourself up on the chopping block and you could take a haircut on these. However, they pay out some nice APYs for taking on this risk. And what you can do with the Insur token here is put it into the underwriting mining program and gain 43% APY, which is rather healthy and very generous. But of course, you are taking on a lot of risk. So that is why this is such a high APY. And then for those who have not got that much of a strong stomach, you can go into liquidity mining here on Uniswap V2 and have Insur USDC, and that's paying out around 150%. So that's rather juicy in my opinion. Now from this tab up here that says data, you can actually see transparently a lot of what is going on behind the covers. So active cover right now around $30 million. The total cover so far around 72 million, and their total premium right now 408K. You can also filter these by the various chains. You can see the number of cumulative covers so far, up to around 600 have been taken out, and pretty decent growth here. So from June, roughly 22 million in cumulative cover, and now up to 72 million. If we see the active cover amount, you can see the general trajectory is going to the top right hand corner, which is what we like to see. You want to make sure that this is growing and people are actually trusting this to insure themselves on their favorite DeFi app. And one of the most popular down here, and somewhere I want to be putting some insurance coverage to work, is definitely on Anchor from Terra, because getting 19.5% on your stable coins can make for a very juicy passive income. But as I say, you want to be able to sleep easy at night, so getting insurance on this is going to be essential. And when I do come around to doing this, I will do a full tutorial on how I get my coverage. They've also got the mining stats for you to look at, the total capital locked, the total Insur locked in these as well, how much has been mined so far, and the current block reward is 1.85 Insur. And again, generally the numbers are going up on a month by month basis. Another partnership announced today with Alpaca Finance, and this is actually going to have the Insurace widget enabled on Alpaca, so you can simply just click on the Insurace button and come over and get a bit of coverage for yourself directly from their website. So good to see some strategic partnership there. And then if we just go to the roadmap here, what is on the horizon for this? Are we going to see sustained growth? We just saw they've got the Solana grant, which means cross-chain on Sol. And this is something they highlight as what they want to push for, but they want over 60 protocols to be covered. And then going into Q4, interestingly enough, they talk about a product diversification, and this includes insurance for NFTs, which could be a huge market that is currently untapped and others aren't really looking at this moment in time, and also B2B insurance. So that could be insuring a brand new project, which would give them a big tick mark for investors, as a new project oftentimes will come with no reputation. You know, you have those kind of safety concerns, but if you know they're insured straight out the gate, then it will inspire more investor confidence. So nice to see that they're tapping into undiscovered markets as of right now. And this is what you want to see from a company that wants to chase down the leader like Nexus Mutual here. More innovation, more diverse range of product offerings, and doing things better than the leader in the market. So for me personally, I do believe this will be a more and more necessary sector of the market that can only grow as we see more TVL and money flow into cryptocurrency. As we're seeing, it's going to be a multi-chain future, and people are flocking to cryptocurrency for yield in DeFi. So I think think one of the companies here, Insurace, leading the charge to help make crypto investors sleep easy at night, will do very well over the course of this bull run and beyond. So check out the links I'll leave down below for more information on this protocol, and check out the 5% discount code if you want to get a premium today. That's all for this episode, guys. Please subscribe if you're new here, and I will see you in the next one. Goodbye.